Good morning, traders. Paul here with GammaEdge. Today is Tuesday, the 26th of July. Let's get started. First of all, pause your player. Read this. Important to you, important to us. When you get to the bottom, and if you agree, hit that play button. Market model continues on a bullish stance. The long-term cumulative tick, what we call the ribbon or the historical moving averages, have completed their inversion. You can see that the short-term moving average, the red line here, is well above the cyan line, the slowest moving average we have. This is a long-term confirmed uptrend. We are in day 5. Why does that matter? Is that actually this could be the end of the trend. We've had 5 instances over the last 10 years where the trend has ended on the 5th day. You can also see, though, that we've had a continuation of the trend all the way out through the 23rd day before we start getting more sparse. Approximately 1 month cycle here. We've caught the trend, we're in the trend, stay with the trend. It's that simple, folks. It really is that simple. Ride the trend until the trend ends, and the CT gives us very, very good clarity of when the long-term trend starts. On the short-term side, we did have a pullback that occurred Friday, and then yesterday, very, very tight range here. We are looking for a continuation up. That'll be a sign to re-enter if you took profits in this area. Note that we are above the historical moving average here, and when we are holding this short-term level above the ribbon, we take that as a short to medium term signal to remain long, and therefore if you have long positions, that's good. If you have short positions, you may want to reconsider those, especially if we get the indices, the SPX indicated here, if we get the indices moving back up. When we take a look at the SPX, I've got the SPX here. This is the combo. So this is the AM and PM. Here is just the AM in isolation. So these are the monthlies. And then here is the PM, which are the dailies as well as the quarterlies. And what we see compared to the previous trading day is that we are in a net negative gamma condition. Not so important except to say we like to see the relative movement on a day over day of these. And when we take a look at the combo, we had some short-term puts being removed, which is weekly bearish, or excuse me, bullish. But contrasting, we had some calls come out of the complex, which is to be considered a bearish sign. So a little bullish here on that we are getting rid of some puts, but we're not seeing a corresponding increase on the calls. Now this is the combo complex. When we take a look at just the monthlies, kind of the same picture. We have a drop in short-term gamma, but because of these monthlies, just remember your time scales shift. So you've got a drop in the short-term gamma on the monthlies, and then you've also got this same drop in the short-term gamma on the call side here. So just be aware of that. And then over here on the 0 DTE, the dailies as well as the quarterlies, note that we are in a net positive condition. This should be a red line, by the way. I didn't catch that error. So we are in a net positive gamma condition, but we are seeing that same drop where we are seeing a reduction in net negative gamma on the short-term basis, as well as a drop in the net positive. The takeaway from all of this is mixed. It's a mixed signal, although we are showing a short-term bullish tendency as this line continues to increase day over day, with the exception of the downward arrows that we're seeing here. So mixed signal, longer term bull according to the CT, just nothing that is really tradable at this time until we get some directionality. When we take a look at the key levels, note that we are here at 39.66, so we're in this range where I've drawn this level here and this level. The key takeaway for you is that we do have some overhead at 39.75, and again here at 4,000, which has now resumed its level as positive gamma exposure for the SPX complex. This is the combo. We also have call open interest and put open interest showing there, with almost a zero sitting at the 4,000 strike. So this has almost been completely absorbed. And as you folks may be aware, we've got a large negative level setting up at 4,005, which needs to be absorbed next. So if we continue to see calls being added, we'll see this reduce down. We'll see this most likely go up, and that's a good thing. Taking a look at the 0 DTE, we can tell it's the 0 DTE because I only have one tile enabled over here. We've got the 0 DTE COI, the call open interest. The dominant expiry today is sitting up here at 4,000, so we are losing some calls up here. That's not necessarily good, but it is what it is. Contributions above 4,000 from the 0 DTE will be minimal, so this will be the last layer to cut through. The yellow line indicates where we closed last night. This is plus GEX on the expiry, this is minus GEX on the expiry, and you can see that 39.20, 39.25 for the expiry opens the door down to 3,900. And below that there isn't a lot of contribution. So just keep these key levels for today as a potential expiry. The other thing I want to highlight is that we've got some pretty clean transition or hiding areas. So I would also look, especially with FOMC coming up, I would look to possibly just hide in these areas into the close today. So be aware of that. The combo complex, which is the AM and the PM settled, a lot going on here on this chart. Put open interest remains at 4,000. Call open interest dominant remains at 4,000. This has been the structure for some time. You can see here in the yellow area that we do have a large transition, but as I indicated on the previous slide, we have almost zeroed the 4,000 level in net delta notional. Large gamma level. If we push through this, we may get a momentum push to the upside, but this is an extremely large level of gamma. Due in part to what we're seeing right here. Note the JPM short calls that expire at the end of September. Put a break on this. We need to absorb this. I'm looking to see that this level, this $8 billion level right here, comes down. The only way this is going to come down is if we add calls to the 4,005 strike, or we start really populating calls up here and the dealers are basically jumping the gap. So we'll have to wait and see what happens as we go forward. The 39.10, which we consider the line in the sand, net negative gamma, ignore these very small levels of gamma. It's for all intents and purposes, it's net negative below this. This is also the JPM hedge that rolls at the end of this week, and that's going to shift quite a bit. There's 12,700 contracts. These are long puts, and our ability to remain above that means that we're going to, from JPM's perspective, they're getting longer because their deltas are going toward from -1 limit towards 0 limit, and the dealers on the other side of the table are going from +1 limit down towards 0, so they're getting shorter and will continue to buy as we fade into the end of the week. If we drop below 39.10, the picture for the dealers reverses, although with all this net negative, or net positive, excuse me, delta notional down here, I don't think we're going to plunge too far, at least this week. When we take a look at the SPX structure, plus GEX has shifted from 42 back down to 4,000. We think that's material. This is why, in part, we're seeing some of the absorption at that level, why the 4,000 strike has been absorbed. We closed right here, so we're in the middle of this kind of transition area. The short calls need to be absorbed, or we need just to grow the area on the immediate side here so that when they adjust through here, it's pretty much continuous. I will note 3,600 remains minus GEX down here. It's grown just a little bit. All of these have grown somewhat, but you can tell that the bunching that we're seeing here is not very dominant compared to what we're seeing here. And with gamma, with the spot price here, you would expect a larger presence in the put side, and we're simply not seeing it. So people are getting complacent. When people get complacent, I think it's a little concerning, so we'll want to pay attention to that. So what's the takeaway for today? Market model short-term trend is flat. We saw that in the cumulative tick. The long-term trend is intact. You know what to look for. The daily change in the wing charts are showing choppiness. The next target still remains as 4,000, 4,005 takeout. I think we are improving. It's possible we could see a push there on any event. 39.10 is the JPM long put leg, and I think this is our line in the sand to the downside. So that's it for today. A little briefer than normal. If you like today's content, come and join us at GammaEdge.us. We have a lot more content in the gold channels. If you join us, you get a 14-day free trial. You get all the tools turned on, all the channels available to you, and a lot of posting that's going on there. A lot of great traders from beginner level all the way through highly advanced. Experience both in equities and options. Follow us on Twitter, please, at GammaEdges with the S. And of course, if you like today's content, smash that like button. Let me know that today's content was working for you. And of course, follow us on YouTube here so that you get notified the next time we post something. So with that, good luck to everyone today. I do think interesting market times, and we do have these levels to key off of. So hope to see you in the Discord. Take care.